NSE and BSE in stock market. The National Stock Exchange, NSE, and the Bombay Stock Exchange, BSE, are two of the largest stock exchanges in India, offering a platform for buying and selling shares of listed companies. They play a crucial role in promoting economic growth by providing a platform for companies to raise capital and for individuals to invest their money. The NSE was established in 1994 and is located in Mumbai. It is considered one of the largest stock exchanges in the world in terms of market capitalization. The NSE operates on a completely electronic platform, known as National Exchange for Automated Trading, NEAT, which allows for faster and more efficient trading. The NSE uses a sophisticated trading system that incorporates features like real-time price discovery, automatic execution of trades, and the ability to handle large volumes of trades. This makes it a preferred choice for professional traders and institutional investors. The BSE, on the other hand, was established in 1875 and is considered the first stock exchange in Asia. Unlike the NSE, the BSE operates on a hybrid platform that includes both electronic and open outcry trading. The BSE uses the BSE Sensex as its benchmark index, which reflects the performance of 30 large and well-established companies listed on the exchange. The BSE has a long history and is often considered to be the face of the Indian stock market, providing a platform for a large number of small investors, particularly in rural areas. Both NSE and BSE have stringent listing requirements and follow strict regulations to ensure the transparency and fairness of the market. Companies that want to be listed on either exchange must meet certain financial and operational criteria, such as a minimum level of net worth and revenue, a certain number of shareholders, and a history of profitable operations. In addition to providing a platform for buying and selling shares, both NSE and BSE offer various financial products and services, such as derivatives, mutual funds, and bonds, to cater to the diverse investment needs of traders and investors. Derivatives, for example, are financial instruments that allow traders to speculate on the future price movements of underlying assets, such as stocks and commodities. They provide traders with an opportunity to manage risk and potentially make a profit. Mutual funds, on the other hand, allow individuals to pool their money together and invest in a diversified portfolio of assets, providing a convenient way for novice investors to gain exposure to the stock market. In conclusion, the NSE and BSE are two of the most important components of the Indian financial market, providing a platform for companies to raise capital and for individuals to invest their money. However, it is important to remember that investing in the stock market carries risks, and it is essential to thoroughly research and understand the market before making any investment decisions. Additionally, traders and investors must keep in mind that past performance is not a guarantee of future results and that stock prices can be volatile and subject to sudden changes. It is also important to consult with a financial advisor or professional to determine the best investment strategy based on individual circumstances and financial goals. Please like, subscribe and share our videos.